morning, everyone. The next panel is about how gender diversity creates value. To me, that should be very, very natural for us to understand how inclusion within the board can also create value for the company. As we look at our companies, all of us, we serve every part of the nation or part of the world with our goods and services. So therefore, the board should naturally be a reflection of the constituents and clients that we serve. As we also look at the data, of course, I used to manage the market data division within NASDAQ, so I'm always a big fan of data. We also see that performance of companies is definitely helped dramatically by the inclusion of women on the boards. Whether that's causation or correlation is really irrelevant. It's really just a matter of fact that we can see that performance improves as we look at inclusion. As we look at also the panel that's coming next, we are going to be hearing about how the rest of the world is really leading the way in board inclusion. And I think that's what's so interesting, because in so many respects, the U.S. leads the way in our capital markets, in the diversity of our investors, in the depth and breadth of the financial industry. But yet, when it comes to board inclusion, we're definitely falling behind. And I also look at it in the context of the fact that we have two governments that have really taken it upon themselves to promote board inclusion without a quota. There is one country that has a quota that we can see the data is definitely coming through, and that is Norway. They put a quota of 40% on their boards, and they have achieved it. However, when you talk to people in Norway and in the Nordics in general, the general view is it would be so nice to be able to achieve that without a quota. There are other countries, Sweden and Finland most notably, and it's because NASDAQ owns the exchanges in Sweden and Finland. We know that those communities quite well, and they've been able to achieve 27% and 25% board inclusion just through what we call a name and shame type of approach. And the UK and Australia have also really promoted that through government action. I think the difference between the U.S. and the other countries that I've just mentioned is the involvement of the government in really promoting these types of changes within the boardroom. And so I think it's very interesting to see how quickly they've been able to increase the number of women in boards, how easily they've been able to find qualified board members just through government sponsorship and promotion, as well as very clear and directive actions that they've taken through the name and shame. I usually call it fame or shame type of approach to a board inclusion. So I'm very, very excited to hear about all of the benefits that investors see and experience when they look at inclusion on boards, as well as how other countries are leading the way and what we can learn from them. With that, I'd like to introduce our panel, and I guess they'll come up as I introduce their name. Barbara Byrne, the Vice Chairman of Banking at Barclays. Michelle Edkins, the Managing Director of BlackRock. Eve Ellis, the Principal at the Matterhorn Group at Morgan Stanley. Peter Gleason, the President of the National Association of Board Directors. Denise Napier, the Connecticut State Treasurer, and our moderator. We're very pleased to have our moderator from Fortune, Cyrus Zanetti. Thank you very much.
Thanks so much. We appreciate it. All right. Let's talk about some money here, okay? I'm really, really thankful for this panel right here. They are seriously powerful women and gentlemen here who understand this better than anyone. And I understand finance can be a little bit boring, but we're going to try to make it really spicy because it is the #1 issue here. Because we all know that there should be gender parity, socially and morally. But to get companies like an oil and gas company to actually put women on their board, you got to show them that it affects the bottom line. Now, we've got a couple of studies that have come out that people say, to quote, about how women on boards makes a difference. And Catalyst came out with a study, and they basically said that having companies with the highest percentage of women on boards outperformed on almost every metric. So we've got return on equity, 53% higher, which is crazy. Return on sales, 42% higher. And return on invested capital, 66% higher. Now, that study was done looking at companies between 2004 and 2008. And so what I would, if I was a CEO, I'd be like, what's the data say now? Now there's more women on boards, what does the data say now? Does this still hold true? So I just want to kind of open it up to everybody on the stage. How can you, does it still stay true? Are women on boards really that important? Do they really affect the bottom line?
I think they do. I mean, what isn't as much about a woman on the board, and Barbara Byrne, and here we are in the halls of finance to the Bowery Savings Bank. How could you say it's boring? Here we are you look at where women are on the board. It's a question of diversity of thought. You heard the previous panels talk about that. One of the things that we did last year, we launched this thing called the Women in Leadership Index. It's Barclays. We do a lot of indices. And so most of the studies you're quoting are correlation studies that you're looking at multiple regression analysis to see how companies perform over time. One of the things that we were able to do was to create an index, which is a tradable index, and it's on the New York Stock Exchange, and it is an S&P 500 linked index. Here's a stat for you. There should be 100 companies in that index. The criteria for it is either a woman CEO and or 25% of the board is female, $250 million of minimum liquidities, et cetera. So these are reasonably large companies. Obviously, there's S&P 500. There should be, as I said, 100. There are 86. Last year, there were 84. And the reason for that is certain sectors do not meet that criteria. It won't surprise you that the exploration and production and the energy are in there, but it's also telecommunications and some of the major industrials as well. And one of the reasons we did it is you have to measure what matters. And you can back test that data. It had to be back tested. And there's an outperformance of well over 140 basis points in terms of return relative over the previous 5 years. I don't want to look at the last year of total returns, even though it's outperformed, because since it's not been in the E&P area, it has clearly outperformed.
Right.
But it does make a difference, and people tend to, especially men, measure if you can show the value and demonstrate it in a way that's not correlation, but live market, people pay attention.
Michelle?
I think you've dealt with the sort of stats and the finance part of it really well. Taking it back to more human behavioral things, diverse groups have been proven to take better decisions. One of the primary responsibilities of the board is to take business decisions. And I think one of the obstacles is that managing a diverse group or leading a diverse group is more difficult than leading an homogeneous group. Decision making is more difficult because you consider everything from different perspectives and so on, but ultimately the decisions are better and have better impact. And so from our perspective, the value add of a diverse group on the board is that the decision making is better and it's going to contribute to long-term financial returns in that way.
Eve?
Well, we believe that gender diversity on boards matters greatly. We don't think that it is a silver bullet for company financial success, but it's one serious, important indicator and identifier, but there are others. So as wealth managers, we serve a certain type of client, and so we focus on the process. So we look at the parity portfolio, and I have to say that this is one of the few places where I don't have to spell parity, so I appreciate that. But we look at the parity portfolio as a strategy, as an investment process. And our clients are very successful, and they appreciate the process. And so when we started the parity portfolio 3 years ago, we were focused on, yes, it does make a difference. I'll take it one step further in terms of the Catalyst research. And I see Brandy Stellings here, who puts forth all this wonderful research. But we saw that companies with 3 or more women on their boards had a 46% higher return on equity, a 60% higher return on invested capital, and an 84% higher return on sales.
Wow.
So that's 3 or more. So it's a starting point for us in the parity portfolio. We create our investable universe by looking at all companies that have a minimum of 3 women on their boards. And so again, we feel that it's about the process for our clients and that it does make a difference, but for our clients, it's a starting point.
Peter?
I guess I'm going to go back to Muhtar Kent this morning, and I question why we asked that question. Mm-hmm. I mean, do we look at, we've got 3 vacancies on our board, and if we add 3 men, it's going to increase our return on equity by 26%? Nobody asked that question. So why are we asking about adding diversity on the boards? The competitiveness question, I think, is the global competitiveness is where we need to look, and we look at diversity as an advantage in global competitiveness to our companies as a whole. I think, putting it down to, are we going to increase our return on equity by X percentage if we add certain number of women, African Americans, Latinos, whatever it is, defeats the whole purpose of the argument. That we really need to look at, are we being competitive in this marketplace, and how do we take advantage of what's available to us to be competitive in this marketplace?
Well, from the onset, let me say that I appreciate the opportunity to join all of you, to be in the company of so many talented and accomplished women, and to know that there are men here that are equally accomplished. Now that's encouraging, and it says a lot about our inclusiveness. Now, from a pension fund or an institutional asset owner's perspective, I come to the issue of diversity as a bottom line investor, not as a social investor, although some people might rightfully think that too. I want our portfolio companies to create long-term shareholder value and mitigate downside risk. I am equally committed to the case that creating value and board diversity are not on opposite sides of the investment spectrum, but in fact go hand in glove with a smart, forward-looking business strategy. I mean, after all, in an unforgiving financial services industry, success is often measured by return on assets. And if I didn't believe that, I simply would not be a shareholder activist on this particular governance issue. If you believe in the premise that a well-diversified portfolio is most likely to succeed over time, then it should follow logically that a well-diversified board is also the strongest foundation upon which to build that strategy.
I'm convinced. So why exactly are only 19% of board seats women? Are we, what's going on here? Who wants to take that one? I mean, it makes sense to me. I mean, this seems really clear. You guys have laid out an argument. You go back to data from 2001, it backs you guys up.
I think right now the companies are not feeling the ouch factor enough. They are in this room, but they're not elsewhere. I mean, we really have to work harder at it. I think there is conscious bias, unconscious bias. We've heard this morning how hard it is. It really takes commitment and work, and I think some boards feel that there are just other pressing matters. But I think it all goes back to how much are these companies feeling that there's an ouch factor. And I think that the more institutional and individual investors put the pressure on them, they will feel moved to do something about it.
I think it goes back to what Shelley said, which is when the NomGov had asked the question, I want a candidate who has these skills, as opposed to, I need a CEO. Traditionally, you would find on a lot of the boards that I've dealt with, there would be the focus of, well, he or she has never been in the C-suite spot, so consequently, why are they qualified? And quite clearly, there are not as many women CEOs.
Like chicken and egg kind of problem.
So if you ask the question, that's why that was incredibly insightful comment, which is if you ask the question, we all know that, in the right way, you'll get the same question can be asked in different ways, and you get very different answers to the same basic question. So starting from a skill set, and then opening yourself up. And people are starting to do this, of bringing in women who've been running divisions or different areas, but not in the C-suite spot. That's been where you've seen the greatest roadblock.
Now, Michelle and Denise, you guys are probably one of those powerful women on here because you can influence companies. BlackRock, for example, $4.5 trillion in assets. You guys are pretty much invested in every company by 5%, as it is, U.S. companies. So you have a 5% voting stock in every company. Think about that, right? And Denise as well, investing money for Connecticut's pensions is a huge amount of money. So how are y'all influencing companies on this issue? And do you think it really matters? And have you been lobbying them?
Yeah, the main way that we raise this issue with companies is through our direct engagement with board members and with senior management, but on this issue principally with board members. And in our experience, one of the most effective things to do is ask questions that the company doesn't have a defensible answer for. So if we go in and say, we believe you need to have 30% women on your board, you go down a path of a lot of the stuff we've been talking about, business case and so on, and it's a relatively futile conversation. If you say, can you justify why this company doesn't have a more diverse board, it's a much more direct discussion around that issue, and then the onus is on the company to defend why this board is the right board for now and into the future. I think one of the other important areas for investors to raise with boards is succession planning, and this has obviously already come up today. But when you really are looking for a very specific skill set and you want to fish outside the normal pools, so to speak, for that director, that may take a bit longer. And you can't sort of try and squeeze that into a 3-month period. You need to be looking out into the candidate pool and starting to build those relationships through networking or other ways to make sure you're identifying a more diverse group, and therefore when the vacancy comes up, you can approach those people directly.
Can I piggyback on that vacancy issue just for a second? I do a lot of these conferences. As my title would suggest, as president of the National Association of Corporate Directors, I get an awful lot of people coming up to me and saying, I'm looking for my next board seat, can you help me? This is really a supply and demand issue. When it really comes down to it, and we heard this morning that 325 seats or something like that came up in the Fortune 500. Think about that as a percentage. Even if you just do a pure average of 500 companies, 10 board members per company, that's 5,000 seats, 325 came open. It's less than 10%. It's going to take a long time to churn a board if you're only churning less than 10% on an annual basis. Kathleen Kinney's point just a minute ago on the prior panel was, let's go beyond the Fortune 500. Let's look at what are the mechanisms that need to happen. What are the things that need to happen to turn boards over more rapidly so that we get more seats open, that we can avail talented people to take those seats. Now, are term limits the answer? Not sure. Age limits the answer? Not sure. Yeah. How about more effective evaluations, and let's take it a step further of separating the renomination process from the evaluation process. Because you could really look at somebody who's a great director, but may not be the right director for this company in this stage and where they're going. So it may not be that their evaluation says they're a 5 out of 5 and they're really great. It may be, we don't need this skill any longer. We need something different because the company's going in this direction. Our growth cycle is in this direction. We've been disrupted by some technology out there that we now have to think differently about our strategy, and we need different people sitting around this table.
But isn't it hard to throw your buddy from the country club off the board?
It is. I mean, I hear people say this all the time, that it's harder to get rid of a director than it is to get rid of your CEO. Well, that's kind of a scary thought. But there needs to be more churn. And as long as there's a slower churn, we can have the most talented people in the world ready to take seats, but there are no seats to be taken. And that's where we got to focus on how we move that needle a little bit.
Denise?
Okay, let me just say, in the interest of disclosure, my administration was the first public pension fund to sit on the Connecticut chapter of the National Association of Corporate Directors.
Thank you so much.
Having said that, I do think that there's this falsehood that because there are not enough women in the C-suite, that we have little access or less access to the boardrooms. And I don't believe that's true. I mean, there's data, and I've read it, that says that nearly half of the men that serve on the S&P 500, and I think it's roughly 45%, have never served as a CEO. So that is not a valid reason. What we do need to do is we need to nominate women in proportion to the number of men that are being nominated. And let me give you one quick example during this proxy voting season of what we're doing to push the envelope here. Connecticut was the lead filer with CBL. It was a proxy access resolution to give shareholders access to the proxy ballot for the purpose of nominating directors. Well, we received 69.1% of the shareholder vote. And last week, CBL announced their intention to amend their bylaws to give us that access so that shareholders will be able to nominate up to 25% of the board seat. And our nominees will appear juxtaposed to the board of directors nominees. And I think that's something that more of the institutional asset owners need to be doing. And yes, we're going to be looking at the forum and its database and the 30% coalition in the 2020 for qualified women to put up.
Are you is Connecticut on the vanguard, or is like CalPERS and all the other large pension funds, are they also this vocal and this in pushing
Some of us are, some of us not.
Denise is, and she's done a really admirable, incredible job. She's been a pioneer, and we need more like Denise.
Right. Can't beat that one.
You might be a warrior, Denise. I'm not sure.
Exactly.
You might be a warrior. So.
These two. All right, Eve, I want to turn back to investing right now. You explained a little bit earlier about this parity portfolio. And what it is that you invest in companies that have significant female representation on their boards of directors. So how has it done?
So we continually monitor our financial returns and our social returns. So both are important to us, financial first and foremost. However, as a financial advisor, SEC rules prohibit me from disclosing our financial returns publicly, but you can come up to me separately, other than to say we are very pleased with our financial returns.
I had to ask.
In terms of our social returns, and as I said, those are really important to us too, because we want our clients to have a voice. And so we use different metrics for our social returns. One of them being, are the clients feeling that their voice is out there through us? And I'd say, you know, a client said to me, Eve, this is the first time I'm not being a passive investor. And I realized that the process is working. I mean, we have, our clients are socially minded, and they have a financial need. And so we do believe strongly, and have shown so far, that you can make money by investing this way. You can invest with your values, and you also can have a voice. And we think that all three are really important.
Denise.
On the issue of what we can be doing, Connecticut is not only moving this issue company by company with our shareholders, looking to engage them in constructive dialogue long before we file shareholder resolutions, because we believe it's a family affair, and we're not adversaries, and we all want our company to succeed. But we also look at it from a systematic point of view too. This year, because we believe that weak board diversity disclosure engenders weak or insincere support of board diversity policies and practices. At the Connecticut Treasury, we believe that, you know, transparency can be a powerful tool. So
have you like taken your money out of companies that just, you know?
That's a last resort. We don't look to really divest.
Have you done it?
Yes, we have. But let me finish on my comment about what we are doing. We have, this year, Connecticut joined with 8 other institutional funds, collectively representing $1.2 trillion, to make formal requests to the Security Exchange Commission, that they adopt a new rule to strengthen board diversity disclosure, requiring board nominees to identify gender, race, ethnicity, alongside their mix of other attributes, experiences, and skills. That recommendation for petitioning for a formal rulemaking was filed in the first quarter of 2015. And so, and I know that the SEC chair is going to be here today, and so maybe she may make mention
I'll ask
of
her about it.
But we will be working diligently throughout this year and next year until that rule.
Why didn't you get
ruling
together
is
with
filed.
BlackRock and you guys together 1.2 plus 4.5? That's like ridiculous.
Well, BlackRock actually is one of our fund managers.
Awesome.
So we're right there with them.
Barbara, I want to ask about the woman's ETN that you guys do.
Right.
Could you tell me? I know it's early days, right? It's early days, and you don't have a full sample set. But how has the index done versus the S&P?
The S&P 500.
And if you strip out energy, for example,
It's outperformed.
it still outperforms.
Yeah.
Even if you strip out energy.
Even
All
if
right.
you strip it out, but it's outperformed. It outperformed substantially from the time we launched it in July of last year. For the previous 5 years, because we have to file with the SEC the history and back tested. This is a live index, right? It's market weighted, and it is adjusted quarterly for any data that is occurring with respect to who the CEO is and or who's on the board. So it's live. It has outperformed. The problem is you can't figure out is that has it outperformed because the women are on the board, but it is a sample set, and as opposed to the correlation studies and return on equity, it's actually looking at how have the underlying equity values performed. And it is very telling, as I mentioned earlier, that in literally 16 months, we've gotten from 84 companies to 8. We've got two. It's going to take us a while to get to the 100. But it is something that, I looked at the data just last night. So we're beginning to get some institutional interest, interestingly enough, from Canada, in terms of wanting to look at this from social awareness. It's not social impacting, but being able to use the index. It gives them liquidity, and they can do swaps, which is just technical side. But it is something we could do, and we did it. We developed the index commercially, but we developed it from a facility we call the Social Innovation Facility, which is something we thought should exist. We had the ability to do it, so we did it.
We got a question from the audience, which is similar to one I have. It's dealing with other countries and mandating. You know, what do y'all think about the U.S. actually mandating? Are we just not moving fast enough? Peter, for example, when you started with this, do we have to be like France or Italy, and actually say if you don't get 20% at least of women on your boards, then you don't get paid?
I think we're in an interesting place, and I'm not a big proponent of quotas and mandates, things like that. But as I said, I go to an awful lot of events, whether they're focused on diversity, focused on performance, focused on boards in general. This topic comes up at every event I'm at. I think buzz is too short of a word. This is a topic that is front and center with boards and companies all over the country, all over the world, if you look at the question you just asked. If I look at the age of boards right now, average age, I believe, is 63 and a half or 62 and a half. I think we're going to see a big movement of people offboarding within the next 5 to 7 years. Just demographics are going to push in that direction to a larger extent than we have ever seen.
Right.
The supply and demand argument that I was talking about 3 years ago, it was like 27% of boards opened to a seat in the wake of the financial crisis. So we went through turmoil. People tend to lock down in the crisis. When the economy picks up, the performance starts to improve, seats start to open up. I think we're going to be in a wave here in the next few years where we're going to see a tremendous number of board seats open up, people offboarding, a new generation of directors come on. Because this issue is so front and center and being talked about constantly, I've got to believe that the momentum is behind it so that we're not going to wait till 2025 to have some parity in this issue. We're going to see it in the next 3 to 5 years, because I think there's going to be that much churn, which I think, again, is probably a good thing.
Not open to anyone. So how do we get, I guess, maybe disproportionately, we see women on boards and consumer products, because it's easy to say, oh, women buy 99% of makeup, so clearly they should be on the board of L'Oreal or whatever. But how are we going to get into the telecoms and oil and gas? What can you do to convince them? I think Michelle or Denise, like when you sit down with, Anna Darko, or they don't even do this anymore, ExxonMobil, like how can you tell them, I guess women pump gas, I don't know, women use gas? I mean, it's just so distant,
I don't think it has to be about your customer base simply. I think, again, if we get back to this thing about boards are responsible for taking decisions, and you want a diverse group of people in the room taking decisions, and some of those people will need industry experience, because one of the biggest excuses used for not having women on boards in certain industries is that there aren't women in senior roles in that industry.
Right.
At the same time, you do need people with a different perspective to the industry perspective or experience if you have a core of people with industry experience already. So you can complement those people and their skills and backgrounds with people from different industries. And as everyone has said, every company these days is a technology company. There are people out there who can bring technology experience, legal. Every company says our people are our greatest asset. So human capital management is a hugely important perspective to have on the board as well. And so I think you just need to think more laterally about the makeup of the skill set in aggregate.
Well, what about CEOs? I mean, we talk about boards, but the number of women CEOs, I think that according to Fortune, went down from 24 to 23 this year, and from what I'm hearing from Yahoo, it's probably going to go to 22. The question here is, will more female CEOs make that change to push more women on boards?
I think more women CFOs are going to be a very important source of women leaders for boards, because again, it's a financial expertise is hugely important. There are a lot more women CFOs than there are women CEOs.
Interesting.
And they're a great resource.
And you're getting a changing of the guard. There are now 90 million millennials, right?
Uh-huh.
They are now the largest single workforce that they have. I'm the mother of 4. They're just not going to tolerate an environment that keeps a certain subset of quite old people, really, and I'm one of them, and that perspective, they're just not. And guess what? The market won't let them, because technology is radically changing how we all do business and how we deliver. So I think market forces will push for diversity, not just women on those boards, but your commentary on from a variety of different backgrounds, where they come from, and diversity of just thought, because we need that to be staying edgy and creative. I just think that there will be a market force. You're beginning to see it even in the type of protests that you see from this generation and what kind of impact they want to have.
Denise?
Well, I think it's all about institutional investor power.
Uh-huh.
And to the extent we pay attention to who's making those decisions, these are institutional decisions that are being made. And we follow the dots. I think we're going to get there. From my perspective, when I look at my fellow pension fund trustees, not enough of them are taking responsibility for their proxy voting. In other words, they're not establishing guidelines that the external money managers must abide by when they vote on their behalf. And that's so important. There is...
So you give BlackRock, a set
absolutely
of guidelines that if you're going to vote my shares, we prefer you to vote it like this.
Exactly, and this is not a seat of our pants. I mean, there's an investment advisory council.
Sure.
I am a sole fiduciary, but there's an investment advisory council, and that the proxy voting guidelines are approved by them. So I just don't get out there based on how I feel. We should handle a governance matter. It has been approved by an independent investment advisory council, and not enough are doing that, and it really is a part of our fiduciary obligation. I also think that rating agencies really need to take a better look at this issue. Analysts need to take a better look at this issue. The indexes need to do that because many of the institutional investors have a considerable amount of their public equity exposure indexed. Okay, and so we're not going to get out tomorrow. We're going to be in those companies for the long haul. And so it needs to be considered as part of the listing standards. And I'm not just talking about board diversity. I'm talking about all best practices that are part of one's governance should be considered.
This was great. Well, I really, really appreciate you guys coming up here and talking about this issue. I think I've learned a lot. I hope everybody else has learned a lot in here. Take the little factoids back to the office and kind of tell people about it. So would you please thank our panel right here.
Thank you. Fun being on